Good morning. I'm Jen Amos at Weiss Research.
I'm Andy Myers, and this is your morning market update for Wednesday, November 30th. Stocks on Wall Street and in Europe are moving sharply higher, following moves by central banks around the world to boost liquidity. The People's Bank of China got the ball rolling overnight when it cut the amount of money that the nation's banks must hold in reserve. The reserve ratio requirement was reduced by 0.5 percentage point, the first such cut since December of 2008. In fact, China had raised the requirement 6 times this year. That move got global equities out of the red, but they've been kicked into hyperdrive by the announcement of coordinated action among the U.S. Federal Reserve, the European Central Bank, the Bank of England, the Bank of Japan, and the Swiss National Bank. The policymakers will lower the pricing on existing temporary U.S. dollar liquidity swap arrangements in an effort to ease strains in the financial markets.
The move is a response to increased signs of stress in the European credit markets. This morning, the ECB was unable to fully offset bond purchases in a weekly money market operation, indicating that European banks are hoarding cash amid worries about the spread of the debt crisis. EU finance ministers are addressing that issue and others in their second day of meetings in Brussels. Yesterday, they agreed on a framework for 2 options to expand the capacity of the Eurozone bailout fund. One option would give bondholders partial risk protection of 20 to 30% backed by the European Financial Stability Facility. And the other would combine public and private funding to buy bonds on the primary and secondary markets. Both options should be ready to go by early next year, but the officials gave no specifics on the projected size of the EFSF. Finance ministers also approved a 6th round of funding for Greece's bailout.
The coordinated move by the central banks this morning is having an immediate effect on the equity, currency, and commodity markets. Right now, all 3 major U.S. stock indexes are jumping nearly 3%, and investors are also reacting positively to the latest data on the labor market. Payroll processing firm ADP reported that private sector employers added 206,000 jobs in November. That was much better than expected, and the biggest gain since last December. ADP also revised the October level higher, from 110,000 to 130,000. The report often provides some guidance to the markets ahead of the government's employment data, due out on Friday. That report is expected to show that the private and public sectors combined to create about 125,000 jobs in November, up from 80,000 last month. Meanwhile, the Labor Department revised their measure of U.S. worker productivity in the third quarter down to 2.3%, from an original reading of 3.1%. The change was due to slower output in goods and services combined with more hours worked.
Let's turn back to Europe, where the impact of the central bank's move to boost liquidity has been even more dramatic than here in the United States. Right now, the CAC 40 in Paris is jumping more than 3.5%, and Frankfurt's DAX index is surging more than 4%. Another big beneficiary of the move is Europe's shared currency. The euro is jumping 1.5% against the U.S. dollar, crossing back above the 135 mark. And the dollar's relative weakness is giving a boost to commodity prices. Crude oil is surging all the way above $101 a barrel, and gold is $30 higher, now trading right around $1,750 an ounce. Meanwhile, investors are moving out of U.S. Treasuries, pushing the yield on the benchmark 10-year note closer to 2.1%. But borrowing costs for peripheral European countries also continue to rise. Italy's benchmark government bond is now yielding 7.3%. That's the latest from Weiss Research. Have a great trading day.